Choice of entity. Hello, my name is Stephen Scarfo, and I am a certified public accountant. And today I will be talking about the choice of business entity. Before I get too far into this, I want to explain that it is very important for you to contact your local CPA or accountant in making this choice. This information is provided at your own risk. I've been practicing for about 29 years, and I've come across a lot of situations. And these situations require really a lot of information going into your choice. So when you speak with your accountant or your CPA, you need to bring that information, as much as you know, to that meeting. There are three concerns when you make your choice. One is the amount of revenues. The greater the revenues, the greater the risk. So a business that's generating billions of dollars or millions of dollars is at a much greater risk of being sued than one that's just generating maybe $5,000 or $10,000. Second concern is the occupation or the type of area that you're working in. If you are a roofer, for example, and you're going to have employees on a roof of a customer, there are concerns for damages to that home and also to your people being injured in the process of putting the roof on. So you need to make sure you have appropriate insurances. And this will also impact on your choice. The higher the risk, the more I recommend a person set up a corporation or an LLC. The third concern is the number of people that will be involved in the business as owners. If there's only one person in the business, you can be a sole proprietor. If there's two or more people, you have other choices. Even as one person, you can also have a sub-S corporation in your name, or even a corporation, and be the total owner of the corporation. If there's two or more people, you have the choice of being a partnership. Actually, any two types of entities can be inside of a partnership. So actually, sub-S corporations or C corporations or individuals can be part of a partnership as owners. All this information is important to provide to the person who's doing the consulting. Now, the sole proprietorship is about the simplest of all the entities, business entities that there are. A sole proprietorship is one of the most popular forms of business entity because it involves the least amount of paperwork. Many times the bookkeeping uses single entry accounting, which is basically involved in just showing revenue and expenses. Many sole proprietors use Quicken or Excel worksheets to track their revenue expenses. Even though you are a sole proprietor, you may still have to check about licensing, get an occupational license in particular cities or counties. And also, if you are a professional or doing some type of construction work, you need to make sure you get the proper licensing in the state that you're in. A sole proprietor has some advantages and disadvantages besides being simple to set up. One of the advantages is also, if you're not grossing very much revenue, the likelihood of being sued is reduced. Also, it's just keeping track of your books may be the main concern in making sure that you are successful in your business. The drawbacks of sole proprietorships is that you have unlimited liability. That means if you invested $5,000 or $10,000 into your business, you could be liable for a great amount of that personally. So if you got sued for a great amount of money and you didn't have the appropriate insurances, you personally would be liable for that if you are in a sole proprietorship. That's why when there's high risk, I always recommend that my clients go with a corporation or an LLC to help limit the liability. Of course, you have a responsibility, even if you have a corporation, that the officers have to conduct themselves properly. That's why I always recommend that they get the minimum amount of insurance for whatever the type of business that they have. A sole proprietor also has a second drawback that deals with the Social Security Medicare tax. Whatever your profit is from your business, if you are profitable and you are a sole proprietor, is subject to the self-employment tax. This tax is 15.3%. Now, when you're an employee working for someone, the Social Security Medicare tax equals 7.65% of your W-2 wages. However, when you own a business, you are paying the employers half, which is 7.65%. So between the two of it, it's 15.3%. Now, if you have a great profit in your business, this could be a substantial amount of taxes to be paid besides the regular taxes. So many people who are self-employed with a sole proprietorship end up at the end of the year maybe owing a little bit of money or a lot. If you have a $100,000 profit, you will have a 15 $300 liability. There's a little discount there that they give you basically just for the self-employment tax, besides the regular tax. And this is one of the reasons why people incorporate, so that they would have the advantage of controlling the amount of the Social Security tax they have to pay. Those are the drawbacks to a sole proprietorship.